Well, good morning, and here I am with my Dunkin' Donuts coffee. This is only the third cup, so I'm not that wound up, although I'm kind of wound up, but let's see. I am Kenny Polcari, your host, and today is Tuesday, February 8th, 2022. And what have we got going on? So stocks just kind of churned yesterday, right? There wasn't anything to really drive it. No economic data, so they tossed and they turned all way, really awaiting Thursday's CPI report and next Tuesday's PPI report. 10 years, though, are now kissing 1.95%. So 2% can't be that far behind. Nvidia and the ARM deal gets canceled, which is not a surprise, yet they are quoting Nvidia down about $5 in the early market. Crude oil taking a breather after, its explosive rise, but don't expect it to collapse. And what do we have for dinner tonight? This one-pot boneless chicken thigh recipe, which I already put up on Twitter with the picture. I'm going to give you the recipe in a minute. All right, so stocks tossed and turned all day. Investors got to reevaluate the Friday non-farm payroll report along with a handful of earnings reports. The 10-year Treasuries once again kissing 1.93%, leaving many to speculate on when it's going to breach 2. Calls of 3% by year-end now seem to be all the rage. Recall in early January, the calls were for 2.25%, 2.5%, maybe by year end. But with the latest jobs reports numbers and this week's CPI report, the talk is getting suddenly more hawkish as many analysts try to pinpoint the number of hikes over the course of the year. What started out as 2 or 3 has now turned into a bevy of analysts calling for upwards of 5 to 7 hikes, which is kind of comical because these are all the same analysts that never questioned the Fed's analysis. They were solidly in the Fed camp, reiterating the Fed story. Remember the transitory story? Yeah, that one. All of them siding with what was then a flawed thesis. But whatever, it is what it is, or rather, it was what it was. The turbulence that started like 7 weeks ago continues today, and it's only being amplified by the dramatic moves in big tech. And the dramatic might not even be the correct word to describe what we witnessed last week, right? It was a massive, record-breaking one-day decline in Facebook that dragged not only the FANGs lower, but dragged the broader market lower as well. And then the reversal the next day, inspired by the stunning Amazon results, right? And all this turbulence ignited by the fact that the Fed must correct the mistake in its assessment of the current rate and the pace of inflation and the damage that it will do or can do to the system. The Fed is now in the position to taper, hike, and tighten all at the same time. And that's going to continue to be the story as we move through the next 5 months or so, 5 or 6 months, right? Until the markets and investors really get kind of comfortable with where we're going. After the up and down all day, we ended the day both up and down, right? The Dow was flat. The S&P was down 17 points. The NASDAQ was down 84 points. The Russell was up 10, and the transfers were down 22. So it was more broadly a negative day, right? To date, the earnings season is not disappointed, and 79% of the reports have beaten on the bottom line. Yet it has been, as usual, the guidance being offered going forward that has provided the action and the angst. Even companies that have beaten the estimates, like yesterday was Hasbro, right? They beat on top and bottom lines, yet they were down 1%. And they're having trouble performing, right? Those companies that are beating are having trouble performing, while those that miss are getting hit really hard, as they should, suggesting that investors are repricing individual names and the broader market as we all prepare for what's ahead. Analysts at JP Morgan telling us that investors have grown overly bearish and that once this clears up, stocks will go higher. Yeah, well, let's see how that works out, because I don't see that happening in the near term at all. By year end, maybe. I would expect that I expect that the market's going to adjust to the new Fed policy. But in the near term, I am still very much in the road is rocky camp. In merger news, we found out that Frontier and Spirit Airlines are getting married, pushing it to the number 4 position, displacing JetBlue. Now look, I've never flown either of those, and I'm not sure I ever will, but in any event, the news sent Spirit, which is SAVE, interesting that that's its symbol, up 17% on the day. JetBlue ended the day up 3.7%, and the Jets ETF ended the day up 2.8%. 10-year Treasuries ended the day yielding 1.91%, down from 1.93% as it hovers near the highest level since 2019. This morning, it is up at 6:30 a.m. It is yielding 1.945%, clearly aching to pierce 195. And once that happens, 2% is within the bullseye. Futures are drifting this morning. Dow futures are up 27 points. The S&Ps are down 1. The NASDAQ is down 4 points. The Russell's down 2. NVIDIA is under a small amount of pressure after regulators killed the ARM deal, leaving SoftBank to go down the IPO road sometime now in 2023. NVIDIA is quoted down $5, like I said, or 2%. This, though, is not really new news. It's been a dark cloud hanging over NVIDIA for months. So this shouldn't be a shocker. I would look for $235 to provide support in NVIDIA, and we'll put more money to work in this name on any pullback because I believe in the story. I own the stock. I like the thesis. I believe in the story. There are no economic reports today to add to the conversation, but expect the focus to remain on Thursday's CPI report, which is expected to be hot at 7.3% year over year. The surprise will be if it's weaker than that expectation. On the other hand, the whisper number is suggesting a report of 7.5%. In any event, it will be what it will be. And the Fed is not expected to change course at all in terms of hikes. But they could surprise the markets with a February increase if both the CPI and next week's PPI prove to be stronger than expected. Next week, the year-over-year estimate for PPI is expected to pierce 10%. A level we haven't seen in years. Oil was again the outperformer. The XLE was up 1.3% yesterday, taking that EFT up 26% year to date, dwarfing the performance of any other industry group in the index. Financials, the next best group, is up 3%, while real estate, communications, technology, and consumer discretionary are all down 9% across the board. The value trade is down 1.4%, yet the growth trade is down nearly 10%. The PSQ, right, which is the ETF that gets you short the NASDAQ, is up 11% year to date, while the SH, which is the ETF that gets you short the S&P, is up 5.6%. Cathie Wood's ARK Disruptive Tech is down 26%, while the Tuttle Short Disruptive Tech ETF, the opposite of Cathie Wood's, SARK, is up 26%. This morning, crude oil is trading down 1.6% as it takes a breather. West Texas Intermediate kissed 7 years highs due to strong demand, Russia-Ukraine tensions, and a weaker dollar. Additionally, the talks reviving the 2015 Iran nuclear deal are also putting oil under a little bit of pressure today. At 7 a.m., oil was trading at $89.80 a barrel. European markets this morning are churning between being down 0.2% to up 0.8%. There's no real news there as they await our CPI report. Bitcoin's trading at 43,800 and Ethereum's trading at 3,100, right kind of where they were. The S&P closed last night at 44.83, down 17 points, and remains within the 44.45, 45.50 trading band. The long-term trend line is now at 44.45 and remains a key level to watch. We have a good shot of testing. I still think we got a good shot of testing at January 24th lows before this is over. And Thursday's report could be the fuse that lights that fire in addition to next Tuesday's PPI report. So stay tuned and stay close. So what do we have for dinner tonight? We're going to have these boneless chicken thighs, boneless, skinless, braised in white wine, cream, with a spinach, sun-dried tomato, Orzo. It's all made in one pot, and it's so good. It would be something that you want to make for a big party. So maybe even this weekend, right? The whole thing takes maybe 40 minutes to finish, from start to finish. For this, you're going to need the boneless, skinless thighs. I used 6 of them last night, cut them into bite-sized pieces, shallots, garlic, butter, olive oil, white wine. I use Pinot Grigio Santa Margherita, chicken stock, heavy cream or light cream if you want. I used heavy. You need fresh spinach, sun-dried tomatoes in their oil, and fresh grated Romano cheese, and then salt and pepper. Begin by seasoning the chicken pieces with salt and pepper, right? You want to rinse them, dry them off, season them salt and pepper. In a large saute pan, big enough to hold everything, you're going to heat up some olive oil. When it's nice and hot, you're going to add the chicken pieces. You're going to saute them until they're brown, right? Maybe, it might be in there 5 or 8 minutes. Remove them, put them in a bowl. To that same pan, now add a half a stick of butter and the diced shallots and the garlic. Saute for 5 minutes or so. Now add 1 cup of the Orzo pasta dry to the butter and the shallots and the oil, and just kind of let it soak up and get coated with the butter and oil. Now, Add in 1 cup of white wine. I use Pinot Grigio to deglaze the pan, allow it to come to a boil and reduce by half. Now add in enough chicken stock to cover the orzo and then some, right? And add in 1 cup of cream and 2 handfuls of the grated Romano cheese. Toss in 3 handfuls of fresh spinach and some sliced sun-dried tomatoes with just a bit of their oil. Don't pour all the oil in the thing. Just take them out of their oil. That'll be enough to kind of give it some flavor and some color. This will give the dish a slightly ready orange color as it cooks. Reduce the heat to simmer. Stir it every 3 or 4 minutes. Taste to adjust for the seasoning and then monitor the pasta. If it sucks up all the chicken stock, add a little bit more just to keep it from drying out, right? You don't want it to be dry, you want it to be moist, but the pasta does have the tendency to suck up the juice, the liquid. So just make sure you're there. You can always add a little bit of, if you run out of chicken stock, add a little bit of water. Not a big deal. You're going to know it's done when it's mostly absorbed and it's moist and you taste it and the orzo is cooked just perfectly. From there, that's it. You can serve it in a big bowl and let everybody help themselves, or you can serve it individually. It's a simple dish to make. Everybody in your family loves it. It'll become a fan favorite. And so enjoy. And you can have that with whatever you want. You can drink the balance of the white wine if you want. You can have some red wine if you want, whatever you want. Either way, it's your call. So the day is young. It's just about to get started. Future's just kind of floating around here, not really in any direction as we await the big Thursday PPI report. I'll see you tomorrow. Until then, take good care.